What you should do to save on your taxes before December 31st. Hi, this is J Mike with Demystifying Your Taxes, and I want to show you how you can save on your taxes right up to December 31st. There are 6 things or courses of action that provide major tax savings to you. So let's get started. Number 1, retirement accounts. Remember, you have until April 18th of next year to contribute to tax advantage accounts, like IRAs. But you must make your final contributions to a 401k or 403b by December 31st of this year. You can contribute up to $20,500 before taxes. And remember, if you're over 50, you can make additional catch-up contributions of $6,500. And that money reduces your taxable income dollar for dollar. And don't forget about health savings, your HSA accounts, if you have a high deductible health plan. You can put away up to $3,650 for individuals and $7,300 for a family. Number 2, tax loss harvesting. You can turn your investment losses into gains. Now, like many people, you might be down on your investments this year with stocks and bonds and cryptos. But you can take the sting out of those by tax loss harvesting. This strategy calls for you to sell your investments that are down and replace them with similar investments or even the same ones. But you have to wait for 30 days, unless it's in crypto. And that crypto does not follow the wash sale rules. We have another video on that, and it's very important you watch that, especially if you have crypto losses. So look deeply into that before the end of the year. Number 3, itemizing. As you know, there are 5 main categories in itemizable deductions. And if you're using itemization rather than the standard deduction, make sure you've reached your limits, or if it's advantageous to you. For example, in the medical itemized deductions, have you gone over the 7.5% of your AGI? Perhaps consider getting treatments or paying medical bills before year end to reach that threshold. Number 4, education tax credits. The American Opportunity Tax Credit provides a dollar-for-dollar credit on a portion of qualified education expenses paid for an eligible student for the first 4 years of higher education. The full $2,500 per student credit requires $4,000 in qualified spending and is available to people whose modified AGI is less than $80,000 for single filers and less than $160,000 for joint filers. To take advantage of that, you might want to prepay the first semester of 2023 this year. Additionally, you may be able to get a tax deductions for contributions to a 529 college savings account made by December 31st. Most of those are state-sponsored, but there are special rules to follow. Look into that if you have college-age children or yourself. Number 5, donations and contributions. You can make the most of your giving and gifting with these tax strategies. First of all, bunching. And that means concentrating your charitable deductions in a single year and skipping the following year, or even several years. Another one is to donate appreciated assets held longer than 1 year. Remember, that donation is subject to a 30% adjusted gross income limitation. And contributions of property. Finally, consider giving gifts to loved ones. You can gift up to $16,000 per recipient to as many people as you like. So if you have 4 children, you could give $16,000 each one. You may not get a tax deduction for that, but they will not owe taxes on that as income. And it can help reduce the value of your estate without giving up your lifetime gift and estate tax exemption. Number 6, RMDs. If you are 72 or older, you have until December 31st to take your required minimum distribution, or RMD, from your traditional retirements like IRAs, 401ks, and other qualified retirement plans. This is a critical deadline, because if you miss it, you can have a hefty penalty of 50% of the RMD. Now remember, in the tax year, your first one is due by April 1st, your first distribution of the year following the year you turn 72. Check with a tax professional, an accountant, to make sure you balance out how you take your required minimum distributions. By the way, if you don't need any, you need to pull it out and you could give it to a charity. You can make a charitable contribution from an IRA of up to $100,000 per individual. Twice that amount if you're married. Just make sure they get it by December 31st. Well, thanks for watching this video, and hope you found some ways to help reduce your taxes before December 31st for the following year. Look forward to seeing you on the next Tax Demystified video.